Managing risk and reward in your alternative investment portfolio. Despite the growth in interest and the market as a whole, some investors are still wary about putting their money behind an alternative investment, no matter how attractive the proposition may be. Perhaps it's the word alternative that puts people off. The truth is, though, any and every investment opportunities carries a degree of risk, whether it's alternative or more mainstream. People who make the right moves and thoroughly research a diverse alternative investment portfolio are far more likely to profit than somebody who blindly invests in mainstream stocks, for instance. The alternative investment market is worth £95 billion today, with the AIM All-Share Index outperforming the FTSE 100 and 250 in 2017 alone. UK AIM companies have also created 430,000 jobs and contribute £15 billion to the UK's GDP. The market continues to grow at an astonishing rate too, attracting foreign investors from all backgrounds, all walks of life, as they look to capitalise on the fantastic opportunities on the London markets. Those who identify the right opportunities and do their research can also build a unique, bespoke alternative investment portfolio that supports their lifestyle, improves their finance, and opens them up to new opportunities. The earlier the people consider the alternative investment scene too, the more time and opportunity they have to dabble in and discover new ways to grow their savings, whether it be through a fixed-term solution or other financial opening. With interest rates so low for the best part of a decade, it's been a tough time for savers in the UK who want to grow their cash. The recent rate raise by the Bank of England to 0.5% has been welcomed by some, but for many others it's still not enough, especially with inflation still relatively high in contrast. Alternatives could certainly help fill the gap. Consider saving for a child's future. Putting some money aside regularly in the younger years can be a fantastic way to pay for university fees years down the line, help them buy their first home, and even work towards their pension. Again though, by doing some research and playing the investment game properly, as it were, that nest egg could grow larger by considering some of the alternative opportunities that are out there. That naturally gives a larger window for the future to greater assess markets and the risks they hold, while putting some of that extra capital into entirely new ventures. At the beginning of October, a report from the Financial Conduct Authority suggested that the mean amount of savings held by 25 to 34-year-olds is just £11,000. And at the same time, the report says that 1 in 5, 19% that is, of 25 to 34-year-olds have no cash savings at all, while 30% have savings of less than £1,000. That leaves them with very little room to manoeuvre financially when they're looking to grow their savings. Certainly it means there is less appetite to experiment. The earlier people start pursuing the alternative market, the greater their chance of building a diverse investment portfolio that better allows them to manage their risk and reward potential. FJP Investment is dedicated to working with investors looking to explore the alternative investment market, helping them to research, identify opportunities, and build bespoke financial portfolios that work for them. To learn more about alternative property investments, get in touch today. Register your interest at www.fjpinvestment.co.uk.